A great business does not mean, giving you good returns. It could be subpar returns. So there are great businesses available at very high valuation, but that tends to, leave you with very subpar returns over a period of time. It is that, these great businesses probably will remain great, but it's just that you have to buy it at the right entry price.
Welcome to Learn from Masters, the podcast where we bring you conversations with some of the most insightful minds in the world of mutual funds and investing. Whether it's equity strategies, market cycles, sectoral trends, or long-term portfolio thinking, every episode is designed to help you invest with greater clarity and confidence. Today's guest is Dhruv Bhatia, Equity Fund Manager at Edelweiss Asset Management Limited, where he focuses on portfolio management with a particular emphasis on the small and mid-cap segment. Dhruv brings over 12 years of experience in equity markets. Prior to Edelweiss, he was a fund manager at BOI AXA Investment Managers, managing the BOI AXA Blue Chip Fund and the BOI AXA Tax Fund series. He's also worked as a research analyst with Sahara Mutual Fund, tracking sectors including consumer, auto, technology, and media. Let's get straight into it. Dhruv, welcome to the show. Dhruv, thank you so much for joining us today. I just want to start off with the basics because we were chatting earlier and you said that you've been in the industry for the last 15 years or so, but the focus is on mid and small cap companies that you've been researching. When did the interest for specifically this category of stocks happen?
So it's always been there. So the last 15 years, I've always been on the buy side of the industry. There's always the inclination to look at more of the mid and small caps because at that time also large caps were exciting, but not as exciting as what the mid and small were offering. And hence, the opportunity was there. There was a lot of under-researched companies, undiscovered companies. Hardly anyone knew about these companies, and that's where the excitement really started. Because these are companies, where you have to do a lot of, on-ground work, understand these businesses, financials, get to meet the management, and that excitement really started, right? Because you want to meet the right management, who are able to execute, and that journey becomes quite exciting to see. And so that's where, really the interest and the inclination started towards hunting and mining into more and more of these mid caps and small caps.
I think you put it rightly, hunting and mining, because there's a very fine line, when it comes to these mid and small caps, when it comes to burning your fingers, picking those penny stocks, picking it just based on the parameter of a very cheap price. That is what investors go for, and then they can get their fingers burned. So let's start off with the foundations. When you are looking at this category, what is the criteria that you really need to keep in mind?
Sure. So I think there are a few things which are very, very critical. The first thing is that the management quality. So the governance becomes quite critical, and it becomes from two elements. One is the execution capability. Second is the governance capability. So whether it's capital allocation, related party transaction, aggressive accounting. So, once, you're clear with both the elements, which is good governance backed by a good management, then comes down that, what is the addressable market opportunity for such a business? Is that industry really growing at a very healthy rate, and can it go on for some longer period of time? If you're able to establish that the opportunity set is large, backed by a good management which is there, then you go down to the economics of the business in terms of how's the profitability, can it be a better ROE business, or what type of return on capital is there? Will it generate good cash flows? What is the competitive positioning and advantage of this business? So I think that's where the fundamental really goes down, that keeping things simple, quality of business, quality of the management, execution track record, and if the economics are right, I think then finally it just comes down to, are you buying it at the right price or not?
But I think that what everyone associates small caps with especially is that it's a fairly risky bet. It's something that you expect immediate returns, and you sort of get like some information on it, you put your money and you make that quick buck. But I'm sure that a lot of this is only myths. What are the myths you want to bust?
So I think two of them. First one is, as I said, that there is one bigger myth, is that people don't differentiate between risk and volatility. In small caps, I think, they are risky. I won't say they're not risky, but I think they are more volatile than what a large cap would be. And that's the very nature of them being small caps. They're smaller in size. They are, growing at a faster clip. So when they fall, they'll also fall faster. But, people don't differentiate risk versus volatility. Drawdowns will be materially higher in bad times in small caps, But the fact is that they are not as risky. So if you have the patience, if you know that you're buying the right companies, the right sector, I think you need to differentiate both of them.
Yeah.
The second bigger thing I feel is that people think about small cap for quick gains. They just think about small caps are only there for making short term gains. Long term, only large cap make your money. I think that is a very, very big misconception that small caps just make quick bunk and just get out. I think the very nature of small caps, and if you've seen over the years, is that every large company was a small company in the past. So I think that's where if you have the confidence, the patience, the ability to hold on, and that's where the journey of small cap really gets exciting.
Yeah. It certainly does. And like you said, there is that association with it that you will make that quick buck, but that the risk will be as amplified. And sometimes that happens in these markets, Dhruv. The fact that it's so volatile at a time like this, what's the best strategy to adopt if you are interested in looking at mid and small cap companies?
I think the focus is, again, going back to the basics, which is quality of business, quality of management, the growth runway for these businesses. The way to think about any of these companies is the longevity of growth that you can see. I think a combination, as I said, of the longevity of growth, the return on capital, the cash flow generation, and backed by a good management, because it becomes critical. These are smaller companies. A lot of them are promoter-run businesses. If you're backing the right, management who's able to execute better, who's hungry for driving that growth and building a big organization, I think that's where, again, it just boils down to.
Okay, so if we were to look at the markets currently, given the acute volatility, the fact that headlines are changing day after day, what is your sense or outlook when it comes to mid and small caps in particular? Where do you foresee them headed?
So I think the last 18 to 24 months has been challenging, both from the domestic markets as well as the global challenges that we've seen. The way I'm seeing is that we've seen periods of earnings downgrade in the mid and small cap.
Yeah.
Though they're still growing at a higher clip than what the large caps are. I think we are probably hopefully behind in terms of the downgrade cycle for the industry for the mid and small cap. Obviously no one knows when this current situation really ends. But as soon as it ends, I think we are probably in a good cycle in terms of an up cycle in the small and mid cap in terms of earnings upgrade. The good part again, stands is that, we are at a time where the valuations are fairly reasonable for these businesses. So economic turnaround, growth prospects looking more positive with valuations remaining compelling. I think they are looking far superior than what they were probably 18 months out.
Okay, so which are some of the sectors within mid and small caps that you find interesting right now?
I think there are a few of them. I would say the manufacturing story is still, manufacturing industrials are looking quite exciting. It's both a combination of this global supply chain as well as the domestic demand that we are seeing. Healthcare becomes quite a promising space, and within that you have multiple, companies, the segments which are there, be it the hospital side, the CDMO, the domestic pharma exports. I think a combination of all are looking quite exciting. We are starting to see certain inflection points in the specialty chemicals. We had a great runway, pre-COVID and just till 2022-23. I think then we had a lull of about 3 years. I think we are starting to see that recovery in specialty chemicals. And finally, the largest sector, which is the financials, which, the financialization of saving, the credit growth recovery. I think a combination of all of them are making it quite promising.
Okay, so you are looking at healthcare, you are looking a little bit at the CDMO, and you were talking about financials as well. That's an interesting space, and manufacturing. But I'm sure that there are certain red flags that when you see a company, maybe 2 or 3 things add up, but certain things don't. What are the red flags while investing in mid and small cap?
So again, it goes back to the governance, which again, is about the quality of management that you're backing, both from the capability and execution, what they've been doing in the past. Again, the accounting jugglery, the governance in terms of related party. I think those are areas which are become alarming. From the financial metrics point of view, over leverage, negative cash flows for long periods of time, and I think the holy grail of any business or the valuation comes down to is the business giving you return on capital which is higher than cost of capital. I think if over periods of time you're seeing that they're not able to deliver that, I think that becomes a red flag.
Given that some investors have really burnt their fingers badly and have been subject to a lot of trauma, let's talk about the related party transactions. If you would like to just maybe give some examples and give us a sense as to how, for a layman or a regular investor, he can look into this in particular so as to not make the same mistake.
So I think, there are examples where a company has another subsidiary which probably is partially owned by the promoter, where the probably the supplies are coming from that related party entity, getting supplied to the main entity, which is the listed entity, and then there is a transaction between the two, where either they charge an extra, there's a higher profitability getting charged. So from a minority shareholder's point of view, there is a slippage of profitability in that value chain. So I think that's where really that related party comes. All related parties are not always bad. It may be a wholly owned subsidiary, and there'll be a reason behind that. There'll be certain subsidiaries or certain related party which is if there's an evidence that it is required, then it's fair. If you're seeing that over periods of time it's just getting elevated and is ballooning, then obviously there is a question to ask.
Okay. Absolutely. So what has been your investment philosophy over the past many years? Did you also initially have the view that it's the large caps that actually generate wealth? And did it change over time, or was it primarily investing in mid and small caps? And how do you see your investment philosophy progressing?
So I believe that there is always time for every segment of the market. So there will be time for the large caps, there will be time for the mid and small caps. So each segment will have its own good times, and each segment will have its good bad times. I think the way the philosophy has really changed is that in the past I was to first look at which are the cheap stocks to invest in. Rather than say that's the classic mistake that you make, because you think buying cheap means you're buying into something which will make you very good money. Over years I've realized that the first target is not to see the cheapness. The first priority is to look at the quality of the business, the quality of the management again you're backing. What is the runway of growth? What is the addressable opportunity set, right? And that's where really you want to focus on, because if that piece is correct, then I think the expected opportunity and return expectations are materially higher. I think I've done a lot of internal check that a lot of those cheap stocks have really remained cheap, whereas the ones which seemed expensive have just become much larger, and they are the ones who've already moved from becoming a small cap to a mid cap, and a mid cap to a large cap.
Yeah. So have there been, if you can cite some examples maybe of instances that you have actually had where maybe it didn't work out for you as an investment thesis, but it taught you a valuable lesson, and what was that lesson?
So I think few of them. Yeah. I think everyone does make mistakes, and I think that is a part and parcel of our industry. I think, as I said, that one of them was the addressable market opportunity. One element I've learned over the years is that the mistake I've made is that if I'm backing a addressable market opportunity set, which is very limited, with a very limited growth opportunity, but the market caps are, expecting to show that this company can become materially bigger but the market opportunity itself is very limited. So that's where, you generally realize that over a period of time when the opportunity set itself is very low, how far can this company really go unless it pivots its business to something, from a larger opportunity set. The second larger mistake is that despite a company which is a great company at, a great business run by good management, the entry valuation becomes quite critical, right? I mean, a great business does not mean, giving you good returns. It could be subpar returns. So there are great businesses available at very high valuation, but that tends to, leave you with very subpar returns over a period of time. It is that, these great businesses probably will remain great, but it's just that you have to buy it at the right entry price.
Okay. Small caps, just like the rest of the market, and mid caps have seen periods of euphoria, have seen massive corrections. Given where we're at right now, where do you think we are in the cycle?
I think we are just in the start of the cycle. There is a lot of noise about this uncertainty which is there, and I think that's a good starting point. We've seen the valuation starting to correct. We've seen that the earnings downgrade is behind us. The good part about the small cap space is that the balance sheets of a larger part of the universe is quite clean. So you don't have an issue that a lot of them are over leveraged. You have businesses which are at very good return on capital. So you are at that inflection point, in my opinion, that you're just at the start of an upcycle for a small cap. You had that journey from 2018 to almost 2024. I think we have 2 years of pause, which is probably frustrating for the investors. I think that's, the more the frustration, the better it is, because now the risk reward is getting more and more favorable.
Yeah, we can't wait for that turn in the tide. I'm sure a lot of investors have been quite impatient. But of course, like you said, it's quite inevitable given there was nothing but euphoria for a very long time. So typically for an investor with a moderate risk appetite, what should be their allocation to mid and small cap stocks in the portfolio?
So I think there's no one fine, single answer. I think it depends on the time horizon. It depends on the investor's risk profile, the risk tolerance. But I would say that where India is currently positioned and where these companies really are, from a risk reward perspective, I think a sizable, deployment can definitely happen in the small cap as a space. Right?
What is sizable?
I would say that, 25 to 30% is a fairly sizable way, because over
Small caps only or mid and small?
Small caps, I think a combination of both could probably be about a 50%. Half of the portfolio could be quite exciting there, because as you are where we are sitting today and where India really stands today, we are at that journey for India where a lot of things are converging together, whether it's the manufacturing growth, the financialization, the digital adoption. I think a larger point for India really is that the incremental growth to the world GDP is only getting bigger and better. So the significance of India in the overall scheme of things is only getting better. So directionally, I think, that's where the mid and small becomes exciting, and that's the reason of this, sizable portion to be there deployed in the mid and small cap.
Interesting. And also a way to invest in small caps is via small cap funds. So can you tell us a little bit more about how investors should differentiate whether to invest in small cap funds or directly in the equity?
I think both options are good enough. But the only thing is that for a small cap investor to do direct investing, he needs to be patient. He needs to give a lot of time to these businesses. A lot of time and effort goes into understanding these businesses, these companies, where they are positioned. So in my opinion, that if a person has that patience, has that time, has the capability to understand these businesses well, direct investing could be good. But I think for a larger part of the audience, it really is that, give it to the expert to do their job, which is to deploy it through a small cap fund. Because over periods of time, we have that experience of understanding patience, understanding the volatility, understanding that there will be periods of drawdown, there will be periods, which will be very great. So I think, we are able to balance that day in, day out. We are looking at these companies, doing a lot of work on each of them in terms of understanding these businesses, the value, what they are able to, offer. So I think from that sense, if you have the time to devote, if you have the expertise, you could do portions of it yourself. But I think a larger audience should still, focus on deploying it through a small cap fund.
Yeah, absolutely. Because we don't have the time, the knowledge or any of that, a typical investor, unless you've been actively monitoring quite a bit. To succeed in small cap investing, what would you say is the right mindset, temperament that you need to have?
So I'd say three things in my opinion. One is the optimism. Right? If you're not optimistic and if you think you're pessimistic, because if you're pessimism, then you'll always see that case where
that's important.
Yeah, so I think you have to be optimistic, not just optimistic about India or about the markets, but about the businesses that you're investing in. I think hunger is a very, very important thing in small caps, because if you're not hungry enough to find that next big opportunity, the big trend which is coming up, then probably you'll be late to enter that pass. And the third bigger thing, because there is that volatility element which is there, I think patience becomes critical. So the optimism to look at where these companies could head over a period of time, the hunger to keep finding and looking at these opportunities, and the third being the patience, to hold even in bad times.
So let's double click on the hunger part. The fact that you have constantly said that you have to really hunt for those companies. Of course, that's true no matter which category you're in, but especially given that there's thousands of stocks. So do you think it's better then that investors use a small cap fund as the route? And do you think that there's a lot to be done to actually hunt for that, a needle in a haystack?
So I think, the small cap fund is the way to go. The reason being is that there's a lot of filtration you need to do. As you said, there are more than 1,000 companies which are part of the universe for the mid and small. It's very, very difficult for anyone, even for institutional IRs, to cover 1,000 companies, right? So it becomes more important to filter down that which are those companies you really want to focus on, which are those companies, and then within that, then double click and say, okay, within this, there are certain industries which are looking more promising, and within that, certain companies which are looking more promising. So there's a lot of effort, time which goes into it to understand that where to really filter out and what are those areas to start filtering out. Because if you don't know where the starting point is, you really don't know what to filter. So I think that becomes important, and that's the reason why, the fund as a small cap fund is a better way to really go about finding ideas.
Because there's a lot of filtration process. So a final question then for those who are watching. We have seen the overall mutual fund investor base grow year after year. What is the messaging that you want to give investors? What's the most important lesson that you have learned that you would like to share?
I think it's important that in uncertain times, in volatile times, to be patient, right? Investing is not about small short-term gains. It's about, enjoying the journey, being part of that journey. There will be, drawdowns. There will be, volatility that will continue to happen. I think that's a part and parcel of markets. So I think that the important message is have the patience, have the right capital allocation, have the right diversification of your portfolio. So think from more the capital allocation lens, think about having patience and think about long term. Rather than, everyone thinking very short term, one company, no diversification. And so I think capital allocation becomes quite critical in this time.
Okay. Let's move on, Dhruv, to the rapid fire. You ready?
Yeah, absolutely.
Okay. Mid caps or small caps? What do you prefer?
Small caps.
Okay. Growth or value? What's the important criteria?
Growth.
Okay. One sector that you're supremely excited about to invest in?
Healthcare.
Okay. One habit every successful investor must develop?
I would say continuous learning. I think there is that, you need to, whenever there's a continuous learning process, and within that, not to have a personal bias. So if you're learning, you'll realize that there'll be mistakes you're making, learn from your mistakes and make it even better. So I think that's where really the continuous learning becomes quite critical.
Absolutely. And has there been any book that you've read that really has changed your life when it comes to investing or investors should read?
I think an interesting book is, Outliers by Malcolm Gladwell.
Yeah.
It's a very interesting book, and I think that's one which probably an investor should definitely read.
What a pleasure it's been. Thank you so much for joining in.
Thank you so much.
So that was an interesting interview. I'm sure a lot of investors out there maybe want to try their hand at investing in small caps. Well, here's what you need to keep in mind. A good quality management is very important. Do remember to see that there's also governance and have patience while investing in small caps. Watch out for related party transactions. Watch out for over leverage as well as negative cash flow. These are huge red flags in any company, and even the entry valuation is very critical. Look at investing via small cap funds because they really ensure that the filtration is done. And unless you have the time and the expertise on your hands, you can look at investing directly in equities. Be optimistic, have the hunger to hunt for the stocks, and of course, have patience. Pharma, CDMO, and financials, those are some of the interesting sectors that Dhruv believes you can look at. I certainly hope you enjoyed watching this podcast. Do remember to subscribe to MF Bharat's YouTube channel, and do like, share, and comment in the comment section below. Thanks for watching.